Welcome to Mauuak Saving Tips. If you've ever been confused by the stock market or unsure how investing actually works, you're not alone. In this video, we're going to break down the basics of the stock market in the simplest way possible. Whether you're completely new to investing or just curious about how Wall Street operates, you're in the right place. By the end, you'll understand not just what the stock market is, but how and why it moves, and how it all affects your financial future. The stock market is like a giant marketplace where people buy and sell parts of companies. These parts are called stocks, or shares. When you buy a share, you own a small piece of that company. For example, if you buy one share of Apple, you're a partial owner of Apple Inc. The stock market allows businesses to raise money by offering their shares to the public, and it gives investors like you a chance to grow your money. To join the stock market, a company goes through a process called an initial public offering, or IPO. This is when a private company becomes public by selling its shares for the first time. The company gets cash to grow its business, and investors get the chance to profit if the business succeeds. Big companies like Google, Facebook, and Tesla all went public through IPOs. It's one of the first big steps in a company's growth journey. Stock prices change every day, sometimes every second. But why? The answer is simple: supply and demand. If more people want to sell, the price goes down. Prices are also influenced by company performance, news headlines, global events, and investor confidence. For example, if Tesla reports higher than expected profits, its stock price might rise. But if there's a scandal or economic downturn, it might drop. Let's simplify this further. Imagine a limited edition sneaker. If only 100 pairs exist and thousands of people want them, the price shoots up. That's high demand, low supply, and it works the same in the stock market. When demand for a stock increases and supply is limited, prices rise. When everyone rushes to sell, demand drops and prices fall. This constant tug of war between buyers and sellers is what drives the market. All of this trading happens on stock exchanges, like the New York Stock Exchange and NASDAQ. These are like giant digital auction houses where buying and selling happens. The NYSE is home to many of the world's oldest and biggest companies, while NASDAQ focuses more on tech firms like Amazon and Microsoft. Each exchange has its own systems and rules, but they both do one main thing: connect buyers with sellers. You might have heard terms like S&P 500, Dow Jones, or NASDAQ Composite. These are stock indexes, and they track the performance of a group of companies. For example, the S&P 500 measures the 500 largest U.S. companies. If the S&P 500 goes up, it usually means the market as a whole is doing well. These indexes help investors understand the market's overall health, like checking the temperature of the economy. Economic factors like inflation and interest rates have a big impact too. When inflation rises, the cost of living goes up, and people spend less, which can hurt businesses. High interest rates can also make it expensive for companies to borrow money, slowing down growth. Both of these factors can shake investor confidence and cause stock prices to drop. That SYULL often hear analysts talking about the Federal Reserve. They read the ones setting those interest rates. So what happens when you click buy or sell on your investing app? Behind the scenes, your order goes to a broker, which then matches it with someone else who wants to take the opposite side of the trade. If you're buying, they find someone selling. This happens in seconds, sometimes milliseconds, all thanks to modern technology and powerful exchanges. You get the stock in your account, and the seller gets their money. Before we wrap up, here are a few basic terms that every beginner should know. Shares ownership units in a company. Dividend, a portion of profits companies pay to shareholders. Portfolio, your collection of investments. Bull market, a market that's rising. Bear market, a market that's falling. Broker, a platform or person that helps you buy/sell stocks. Understanding these terms will help you speak the language of investing. That's a wrap on how the stock market works. We've covered everything from IPOs to stock indexes, from supply and demand to the impact of inflation. If you're a beginner in the USA trying to build financial freedom, this is your first step to mastering the stock market. Don't forget to like, subscribe, and click the bell so you never miss our next episode in this stock exchange series. We'll be breaking down every concept, step by step, in just 5 to 10 minutes,